There is a question hanging over the markets right now that most people are too scared to ask out loud. What if this is a bubble? What if the AI boom that has dragged the entire stock market upwards for 2 years is about to hit the wall? Nvidia at the center. Supermicro.broadcom.amd. Even the second-order beneficiaries like Equinix, Dell, CoreWeave's private valuations. The whole rally has been powered by a single idea, which is that intelligence at scale will change everything, and money needs to be in the companies that can build it or feed it. But the truth is more uncomfortable. Markets can survive hype. They cannot survive mispricing on this scale forever. Let's start with what an AI bubble actually means. A bubble isn't about high prices. It's about expectations that disconnect from what a company can plausibly deliver in the real world. And right now we have trillion-dollar valuations sitting on the assumption that demand for compute will grow exponentially without pause. You can already see the cracks. Every hyperscaler is warning about power constraints. Grid operators are saying they cannot keep up. Foundries are at maximum capacity. Data centers are scraping the barrel for land, water, transformers. Even if the technology keeps advancing, the physical world has limits, and those limits don't care about analyst price targets. But the deeper problem is dependency. The entire equity market has become tied to a single story. Look at the S&P. Strip out the AI names and the index has barely moved. That is not a healthy market. That is a market betting its survival on one narrative, one technology, one pipeline of cash flows that has never been tested through a recession. Historically, anytime a market narrows like this, it eventually snaps back, usually violently. So does that mean the bubble will burst? Not necessarily. What comes next depends on 3 forces that are all pulling in different directions. The first is adoption. If AI truly becomes embedded in every sector, from healthcare to logistics to entertainment, then the earnings can catch up with the valuations. The second is competition. If Nvidia's margins collapse under pressure from AMD, Intel, custom ASICs, or a wave of open-source models that demand cheaper silicon, then the whole market reprices at once. The third is regulation. Governments are already waking up to the idea that AI is not a toy. The moment policymakers decide to tax compute, limit model training, or force energy caps, the economics change overnight. There is a version of the future where the bubble doesn't pop because it isn't a bubble at all. It's an industrial revolution in real time. Imagine a world where every company runs its own agents, where autonomous labor cuts costs by half, where AGI-like systems solve problems faster than humans can articulate them. If that arrives, today's valuations won't look expensive. They'll look cheap. But there is another version. One where companies overspend on compute, outcomes stall, models hit diminishing returns, and investors realize they've funded a gold rush before the gold was proven. In that scenario, the correction would be brutal. AI stocks would fall 70 or 80%. Funds would unwind. Startups would disappear. And the stock market would survive. But it would look nothing like it does today. So the real question isn't whether the market survives the AI bubble. Markets always survive. The question is which companies survive with it. The winners will be the firms that convert hype into durable economic advantage. The losers will be the ones selling the dream without delivering the productivity gains that justify the price. Right now, both futures are still on the table. If you are an investor, the task is simple. Don't buy the story. Buy the evidence. Look for real revenue, real margin expansion, real demand, real customers, and stay honest about the biggest truth of all. We are in the early stages of the biggest technological shift in a generation. It might be a bubble. It might be a revolution. It might be both at the same time. But whichever way this breaks, the market will not come out unchanged. If you found this useful, you can support the channel by joining Future Forged. There's a link below with the membership tiers. You get early access to videos, behind-the-scenes research, and the long-form deep dives I can't post on YouTube. It all helps me keep making this content and keep it independent.